Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thanks. Great to be here. Happy Monday.
Happy Monday to you. Happy Monday to PayPal investors. Finally, after a few years of just downbeat movement in the stock, we're starting to get a little bit of a reprieve. The shares are up nearly 30% so far this year. Landon, do you have the data that backs up the optimism back in this stock?
Yeah, I mean, if you look at this if you look at a 1-year chart of PayPal, you know, they're killing it. This is amazing, right? The all-time, or 1-year highs, I should say. If you zoom out to a 3-year chart, it's like, oh man, what used to be, right? Back in the lockdown days when everything was going online, they really, you know, obviously it was a different company then as far as investors were concerned, but they were beat down. They're finally making that comeback. And I think a lot of it has to do with their partnerships. I mean, we've always talked about, when we talk about PayPal, we always kind of look at Venmo and Cash App, you know, how's that battle going? But really the story here is that PayPal, the brand PayPal, is doing the domination right now. It's not Venmo. You know, I think they were up 8% Venmo, that side of it, whereas PayPal revenue was up 19%. So this is a PayPal story, and they're doing it through partnerships. You know, they've expanded their partnership, and there's that 3-year chart. It's crazy. The current year looks like a blip on the radar, but you know, investors want to know what's going on now. So it's headed in the right direction. Again, it's through partnerships. So they've got a new partnership with Amazon. They've expanded their partnership with Shopify, expanded their partnership with Fiserv. They've Aiden, I think, is the other one that they're expanding, or they're integrating with the PayPal Fast Lane. So they're basically, and they've got one with Facebook Meta. So basically, they're figuring out a way to become the merchant of choice, or an option at least, for most of the ways that you can buy things online. And I think that's huge. I mean, they're doing it through partnerships. PayPal used to be just this thing that you bought. That's how you paid your transactions on eBay, right? But now it's actually a way to check out. And you know, I can say that I use it personally. Our business uses it quite a bit, and it's really a strong way to transact. And I think that they've figured out the formula, right? And that's through partnerships. And so I'm very happy to see that. They've also done a great job of cutting costs. They reduced their workforce by about 9%. Their volume is up about 11%, again, due to all these partnerships. So, you know, the top line is growing, the expense line is decreasing, and that's going to make investors happy. That's going to push the stock price higher every time.
You know, Landon, you're right. The 1-year chart, the 3-year chart tells two different stories. We talk about that a lot on this show, how you got to look at both. You know, Alex Chriss started in August of 23, their new CEO, and he brought a different vibe to this company. And what it appears to be, you know, they're going to do better and lower interest rates. I think higher rates and competition hurt them in the past, but there's a new thing. They brought in this guy from Uber to do PayPal ads. And it's kind of interesting if you read about it, because what does PayPal have that other places don't? Actual purchasing data of customers. And advertisers are probably going to like that, how much information they can give them. Is this a part of this company that can start, you know, they've underplayed it in some of their conference calls. They haven't really talked about it too much. But if they start getting in the ad business, that's a massive business that they can tap into.
It really is. I mean, if you think about the gold mine that, you know, like a Google has, you know, it knows everything that you're searching for and what your habits are there. I think even stronger, and this is a great point that you make, Kevin, I think even stronger is, what do you actually purchase? Not just what do you search for, but what do you purchase? Because at the end of the day, that's really what, you know, merchants and businesses care about. What would this person buy? Well, is it similar to what I've got? Can I compete? Can I get them in my store as well? So it's extremely valuable data. I do agree that they're probably testing the waters to see if this works before they get out there and hype it too much. But on the surface, it seems like a winning strategy for sure, especially once they get, again, all of these different partnerships involved. They're going to know how you spend on each one of these different platforms, what you're looking for, and what ads ads to serve you. And just, it kind of reminds me of Pinterest in a way, in that they serve ads that you actually like because they know what you like. And so generally speaking, ads aren't in the way like a Yahoo. When you have an ad on a Yahoo, it's in your way. You're just trying to get around it to get to the thing that you want. Pinterest does it completely different. They're showing you things that are actually helpful and sometimes even better than the search results. So if PayPal can go that route, not annoy its customers, but actually provide value by recommending different services that they know that they're interested, that the consumer's interested in, then it's not only going to add to the bottom line, but it's going to make people enjoy using PayPal more. So it's going to be a win-win for them. So I don't think it's out there yet as far as like this is the reason PayPal's crushing it, but it's definitely something that they're looking at, and it could be a big win for them. We just got to wait and see. But I can't think of a lot of reasons why it wouldn't work, but implementation is always different than idea, so we'll see.
Yeah, and when you look at the some of the charts that you have on this mobile wallet, payment to paid P2P. And stuff like that, the new era that the CEO is actually doing. There's actually a positive note out of Deutsche Bank today. They raised the price target to 94 from 74, just from some of the things that this new CEO is doing. He came over from Intuit. Is that the key here, Landon? Because they've got over 400 million, users across all their platforms. So is it that CEO decision? Because that seems to be the theme going on right now in underperforming stocks. Is you got to change leadership. And they have.
Yeah, I mean, if you look at the 3-year versus the 1-year chart, this guy came in August of 23. He looks like a rock star right now, right? I mean, obviously he's doing good things, and we've seen in the past what a CEO change can do. One of my favorites is Domino's. Like, that stock was dead, the company was dead, and then all of a sudden, 10 years later, it's crushing it. So CEOs can make a huge impact, and basically the entire idea here is that this space is growing, right? This is a rising tide that's lifting all ships. PayPal is at the forefront of this. They've turned it around from being kind of, obsolete technology to being the wallet of choice. And in fact, they're growing the most out of all of the digital wallets right now, including their own Venmo, which is, supposed to be the mobile one, but PayPal is becoming that for them. So, you can see PayPal is beating Cash App. It's beating its own Venmo. It's beating the competitor Square. So it's at the top of the heap, and by a pretty big margin. This is changing in app users. So this is people, joining, downloading, growing the number of users that are on the PayPal app. So they're headed in the right direction for sure. In fact, they just raised guidance because of, they talked about how the consumer's resilient. Back to school shopping was bigger than what they thought it would be. So really kind of everything's going in the right direction for this company, which is why it's at 1-year highs. And I think a lot of it, back to your question, I think a lot of it can be attributed to the CEO and the strategy shift of just, partnerships, increase revenue, cut those expenses. Again, that's always a winning formula for investors.
Yeah, and you mentioned those partnerships, Amazon, the partnership with MasterCard also. They're giving cash back on those purchases above a specific limit. But they've got earnings at the end of October. I mean, with this 27.5% rally we've seen so far this year, are you guys still, interested in this on the buy side?
Yeah, I would. With all these, price target raises and everything, you may not see a dip. I'd definitely be buying on dips. If they were reporting tomorrow, I ran the numbers, they're at plus 27 right now, even though they're at 1-year highs. So the data looks really strong, and we could support a little bit higher move. But if we push up another 10, 15% into earnings, then we're probably going to be closer to neutral because, we're a lot of the value, we're value investors, I guess you could say it, like LikeFolio. We always consider where the stock is versus what expectations are. We think that expectations are high, but the data is a little higher than what they are. So we do see room to the upside if earnings were tomorrow. We do have a few weeks until then, though, so we'll just have to see. Hopefully for earnings traders, it's sideways or maybe a couple dips between now and then. I doubt it, but if so, I'd be comfortable picking up shares heading into earnings.
Yeah, it definitely seems the narrative's changed on this one over the last several months, maybe due to some of the implementation of the new CEO's path moving forward and monetization. All right, great stuff. As always, Landon, appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down PayPal.